Hi, Professor Diego. My name is Yiran, and this is my clip project presentation for managerial accounting for strategic growth. Okay, so the strategic goals of visionary innovations are supporting financial sustainability, fostering ethical leadership, promoting organizational transparency. So part one is the financial insights. So we need to apply a lot of managerial accounting tools. For example, the job order costing, like it ensures precise cost tracking for customized devices, and direct materials and labor systematically tracked by job order. And the other cost, the cost behavior analysis, and we will talk that later. And also master the budget, integrate sales, production, and capital expenditures. So this is the graphic of the cost behavior analysis. We have fixed costs, variable costs, mixed cost, and one of the examples. And the first one, the fixed cost, of course, it includes like rent, insurance, depreciation, and a lot of other fixed costs. And the variable cost would be materials, labor, and packaging, and also like probably delivering or other like cost. Mixed costs are like utilities, for example, the base and plus the per unit. For example, if we have 3,000 units, the cost would be 133 units, dollars per unit, and if the selling price is at $220, the margin profit would be $115 per unit. And the first part also included budget and planning. So we need to master the budget, integrate sales, production, labor, and overhead. And also we need to have this like sustainability metrics embedded. So for example, 30% eco supplier sourcing built into materials plans would be like a $750K solar array investment in capital budget. So that would be the budget for the sustainability. Okay, so let's dive into part two, would be the ethical considerations. And for this part, one of the very important thing is the ethical pricing. So customers can see clear energy savings payback. Prices include internal carbon charges would be $5 to $10 per unit. And we need to avoid misleading green claims in marketing and also balance profitability with accessibility. For example, the Pro model of the visionary system model like saves 85 kWh per year, giving customers $17 in annual energy savings. And in the cost allocation, we use cost-based drivers rather than averaging by labor hours. For example, the Pro model consumes more energy, so each unit carries about $5 more in allocated energy costs. And if we only use labor hours, the Pro unit would be undercosted and the base model overcosted. This distortion could lead to unfair pricing and removed incentive for engineers to improve high energy designs. So by using a more precise allocation method, we ensure the cost and responsibility are aligned. And also we can prevent cross-subsidization across models. And the next is the ethical performance measurement. So we need to have the balanced scorecard, includes ESG indicators, bonuses weighted by both financial and sustainability results, clawback rules for misreporting data. Like for example, if each device emits 50 kilograms carbon dioxide, our goal is to cut it into 40 kilograms within 1 year. Okay, so this is the last part, the leadership and growth. We need to do a decision making enhancement, which is like the KPIs guide, strategy alignment, cost benefit analysis supports balanced choices. Triple bottom line informs capital reviews. Variance analysis enables timely adjustments, like for example, variance analysis reflect material cost $20K over budgets, which prompting the supplier review. And then the next would be the trust building. We need to have the like transparent cost reporting, builds credibility, of course, and clear metrics ensure fair evaluation. The budgeting engages cross-functional teams. Like for example, the team like saw direct labor tracking linked to bonus, boosting accuracy would be by 15%. And also the job costing transparency improves collaborations, of course. And the culture and growth. So the quarterly town halls for financial updates, real-time dashboards for performance data, employee input in cost-saving workshops, cost insights drive like sustainable growth. Like for example, employee workshop reduce packaging waste probably can save 50K like dollars annually. Okay, so this is the last part, the conclusion, the key takeaways of the presentation. Well, in this course, the accounting, the managerial accounting links profit, ethics, and transparency. It strengthens trust and collaborations between employers, and it supports innovation and sustainability, of course, and then it builds long-term competitiveness. So therefore, managerial accounting is not only a financial tool, but also a strategic bridge that connects profitability, ethics, and transparency. Thank you so much for watching. Bye bye.